Are you struggling to pass the CPA exam? Did your review course fail to fit your learning style? I'm Darius Clark of I-75 CPA Review, the #1 course supplement, where the right teacher makes all the difference. All right, here's some other issues in multi-jurisdictional tax the CPA exam could easily ask about, so let's see what we have to know. The idea of business income versus non-business income when it comes to state income tax purposes. So the exam will give you taxable income of a corporation that does business in several states, and they'll ask you how much does this one particular state tax for state income tax this corporation's bottom line. And before you know the answer, you have to be able to determine whether the income is non-business income, such as investment income, like dividends, interest. That would be apportioned to the corporation's home state only. If it cannot be determined which state the dividends or interest is earned, and usually you can't tell, because like we have here, Franklin Corp is a domestic corporation in Pennsylvania, but does business in Pennsylvania, Delaware, New York, and New Jersey. Franklin Corp has excess cash, and they invest $1 million in Bank of America shares, and they receive a dividend of $16,000 in the current year. Well, the dividend will be taxed in Pennsylvania only, because dividends are considered non-business income, and non-business income is taxed in the corporation's home state and is not apportioned to the many states where Franklin Corp conducts business. So New Jersey, New York, Delaware, they won't be able to tax that dividend because it's non-business income. It's not apportioned among the various states. This $16,000 dividend income will all be taxed in Pennsylvania, the home state of Franklin Corp. Now, it's going to be different if it's business income. For state income tax purposes, business income is apportioned among all the states in which the corporation does business. So designating income as business and non-business is very important for state income tax purposes. Business income is just generated from regular business operations, like the sale of inventory, the performance of services. Dividend and interest income, that's usually non-business income, we said, right? Sure. Could it ever be business income, dividends and interest? Well, if the company's a commercial lender, right, then interest income is their business income. Or if they're a brokerage firm, then maybe dividend income is their business income. What about rental income? Well, rental income can be business income if the company's a real estate developer and has leases with many tenants, and that's how they earn revenue, then it could be business income. Otherwise, rental income, interest income, and dividend income are usually non-business income, and they would not be apportioned among the various states. If they test this at all, it could be a simple question like this one. Apex Corp is a manufacturer of clothing. Which of the following would normally be considered business income for state income tax purposes? What about dividends on common stock investments? No, we said that's non-business income. Interest on bank account balances? Non-business income. Rental income? Most likely going to be non-business income unless they told us that they were a property manager or something, or a real estate developer. But here, they're a manufacturer of clothing. So rental income would be non-business. What about income from the sale of inventory? Sure. Letter D. Letter D, business income is generated from regular business operations, in this case the sale of inventory or the performance of services. Here we have a manufacturer of clothing, so the sale of inventory would be income that's considered business income. Why does it matter? Because we're going to have to apportion that income to the various states for state income tax purposes. How about this? For apportionment purposes, which of the following is correct with regard to interest and dividend income? A says dividend income is considered non-business income. That's right. And usually apportioned? No. It's not apportioned to the various states. Dividend income is non-business income, and it's taxed by the state of incorporation. So whatever the home state is, they'll tax the dividend income. Same with interest income. Letter B says interest income is considered business income? No. Generally no, unless you have a bank, right? But it doesn't say that. So it's not business income. If it's interest income, it's usually non-business. And it's not apportioned because it would be taxed by the home state. C, dividend income is considered non-business income and not apportioned. That's right. Letter C looks good. D, interest income is considered business income? No. So let's go with C here. Dividend income and interest income are considered non-business income and therefore not apportioned, but taxed by the company's home state. How about this? Which of the following is correct with regard to state income tax and non-business income? 1. Interest and dividend income is generally taxed by the company's home state. Yes. 2. Rental income is generally taxed by the state where the building is located. Yes. So 2 is correct also. Rental income is generally taxed by the state where the building is located if it's considered non-business income. You wouldn't apportion the rent income unless it was considered business income. And the facts indicate that both here are non-business income. Interest and dividends, they're taxed by the home state, not apportioned. Rental income taxed by the state where the building is located, not apportioned. Rent income generated from an asset not used in regular business operations like this is considered non-business income, taxed by the state where the building is located. Notice it's not taxed by the home state, but taxed by the state where the building is located. All right, let's talk about business income, because business income has to be apportioned to the various states in which the company does business. So let's look at the apportionment factors that states use. Most states use sales as an apportionment factor, but they could also use payroll expense. Average total property could be used as an apportionment factor, and some states could use all three of those. So let's start with a basic example. Alden Company had taxable income of $1 million. Total sales were $10 million and broken down as follows. So the total taxable income of $1 million, each one of these states wants to tax a portion of that $1 million, but they're going to do it based on total sales. So Delaware had $4 million of the $10 million in sales. That's 40% of a factor. Michigan had $3 million of the $10 million in sales, or a 30% factor. New Mexico had $2 million, a 20% factor. Arizona, $1 million, a 10% factor. So while all four states are going to tax 100% of this $1 million of taxable income, no one particular state is going to get more than their share based on the percentage of sales, because sales is going to be the apportionment factor in this example. So if the question asked how much of this $1 million is taxable in New Mexico using sales as the apportionment factor, then you would see that sales in New Mexico comes out to 20%. 20% of the million would be 200,000, and letter C would be the answer. So they might use sales as the apportionment factor. Very common to do that. Let's see what they're going to use in this question. It says Big State Corp has business operations in several states as shown in the table below. So they're doing business in California, Florida, Arizona, Kentucky, South Dakota. Taxable income is $1 million. If taxable income is apportioned based on total payroll, how much income is taxable to Arizona? So in this problem, even if they gave you the sales figures, we're not looking at that. We're only looking at total payroll. So we would do pretty much the similar job that we did in the previous question, but just based on payroll compared to the total payroll. So you can see that total payroll is 100,000, and they're asking about Arizona. So Arizona is 20,000 of the 100,000, or 20% factor, and 200,000, letter D, would be taxable to Arizona based on using payroll as the apportionment factor. So we'll go with D here. Now the CPA exam could take a basic question like the one we just did and make it a little bit more sophisticated, like this. Big State Corp has business operations in several states as shown in the table below. Taxable income is $1 million, of which 200,000 is income from specific transactions in California. One of the states that they do business in is California. So here's the new facts right here. Everything else is the same. They have $1 million of taxable income, but this time 200,000 of the million is specific to California. So right away, we can't apportion 200,000 of this million because 200,000 belongs to California. So we can only apportion 800,000. We can't do what we did last time, which was take 20,000 divided by the 100,000 total payroll, 20% times the $1 million, and Arizona is going to be taxing 200,000. That's what we did last time. Can't do that this time, because the first thing we have to do is we say that 200,000 is specific to California. We only have 800,000 to apportion. So we take the 200,000 from California away from the total taxable income of $1 million, and 800,000 needs to be apportioned. Now we could say if total payroll is 100,000 and Arizona payroll is 20,000, then the 20% apportionment factor that we used last time is still good, but this time we can only multiply it by 800,000, not by a million. So taxable income to Arizona will be 160,000, which is letter B. And then of course the exam could ask about California, which already 200,000 is going to be income from specific transactions and be taxable in California. But it's saying if taxable income is apportioned based on total payroll, how much income is taxable to California? So the first 200,000 goes right to California and is taxed there. So the answer is going to be at least 200,000. And then we have to do our payroll apportionment. California's payroll is 10,000 of the 100,000, or 10%. So 10% of what? 10% not of a million, 10% of 800,000. So 10% of 800,000 that still needs to be apportioned is 80,000 more. So 80,000 is the apportioned amount plus the 200,000 specific amount to California equals 280,000 of taxable income that California is going to get to tax, and that's letter A. So this is the kind of question I think they could ask, maybe in simulation, possibly in multiple choice. If you get an apportionment question, look out for any specific transactions within a particular state. You won't apportion that amount. Here we had to apportion 800,000 after giving 200,000 straight to California. Now, if the exam wanted to add one more thing to this, they could. What if instead of one apportionment factor, there were 3 different factors? One apportionment factor for sales, one for average property, and one for payroll. So then, instead of apportioning once, you're going to have to do it 3 separate times. So they tell us Tri-State Corp does business in State X, State Y, and State Z. Relevant information appears below. And they want to know how much tri-state taxable income should be apportioned to State X. The sales factor would be done with 500,000 divided by 5 million of total sales, right? Because State X sales is 500,000. Total sales in all 3 states, 5 million. So you'd wind up with a 10% sales factor. Then you have a property factor, 1 million divided by 2.5 million. That's a total of 40%. So you have a 40% property factor in addition to a 10% sales factor. Now for payroll. Payroll in State X, $100,000 divided by total payroll, 500,000. That's a 20% payroll factor. So add the percentages up, 10% plus 40% plus 20%, and that's 70%. And then divide by 3. There's 3 factors. And now your apportionment factor to State X is 23.33%. The total of the 3 apportionment factors divided by the 3 factors. 23.33 times 700,000, because that's the total of business taxable income, 700,000 before apportionment. So State X would be able to tax 163,310, which happens to be letter D. So this is just taking what we already know, doing it 3 times, adding the factors together, dividing by the 3 factors, and getting your apportionment factor that way, instead of just using sales, or just using property, or just using payroll. Okay, so now it's going to get even a tiny bit more sophisticated, because yes, we still have 3 different apportionment factors: sales, average property, and payroll. But with the same facts, it's going to ask us how much tri-state taxable income should be apportioned to State X, assuming State X gives double weight to the payroll factor. So they're going to double weight one of the factors on the exam, in this case the payroll factor, but on the exam it might be the sales factor. So since we're going to count payroll twice, it's almost as if we have 4 factors instead of 3, with payroll getting double weight. Basically doing the same thing again. The sales factor would be 500,000 divided by 5 million, or 10%. The property factor would once again be a million divided by 2.5 million, or 40%. The payroll factor would be 100,000 divided by 500,000, 20%. Except this time, we're going to add another 20%. Why? Because they're telling us they give double weight to the payroll factor, and the payroll factor is 20%. So just give me another 20% on top of the 20% that we calculated, because this state gives double weight to the payroll factor. So now we have the 10% for sales, the 40% for property, and the 20% for payroll is going to appear twice. Add that up, 50%, 70, 90%, and divide by 4, not 3. Because we suddenly have a fourth factor. The second payroll factor has to be counted as another factor. So now you have 22.5% as the apportionment percentage for state X. And that times 700,000 is 157.5, which is letter A. And if you found this video on multi-jurisdictional tax helpful and easy to follow, and you're looking to pass the CPA REG exam, go to cpaexamtutoring.com, get yourself on I-75, the right road to passing the CPA exam. I'm Darius Clark, and the right teacher makes all the difference.